I must stress that these are very, very early days.
It's clear that this vaccine, even if approved, will not be widely available for many months yet to come.
We absolutely cannot rely on this news as a solution, and the biggest mistake we could make now would be to slacken our resolve at a critical moment.
We're still facing a very dark winter.
Welcome back to Quick Take Charge. I'm Tim Stenevec. Investors around the world are still coming down from Monday's high after we received news of a potential vaccine advancement. Bloomberg Markets reporter Sarah Ponsick is here with us now to catch us up on what she's been watching. Sarah, you've watched this play out over the past 24 hours. Taking a step back, looking back on yesterday, thinking about today, how are the markets reacting today versus how they reacted yesterday?
Right. So yesterday was really a day for the record books. In certain pockets of markets, it was wild. Seeing the size of the gains or the size of the losses in certain areas, depending on where you were looking. It's called a rotation on Wall Street. Essentially, people were selling the winners and they were buying the losers. So to give you a sense of that, yesterday, Amazon, Apple, Microsoft all fell more than 2%. Then if you look at a big bank like JP Morgan, which has really lagged lately, up more than 13%. So this is what we saw across the board, and we're seeing it play out once again today. Yes, we are seeing some of the enthusiasm. You look at Carnival, for example, today, the worst performer, down 7%. Granted, it was up 40% yesterday, but still, you look at the discrepancy between big tech. The NASDAQ today is down 1.5%. That is your big tech benchmark. Meanwhile, if you look at the Dow, it's still in the green. So we're seeing this continuation of what we saw yesterday, but just not to the same extent.
We're also seeing the news that Carnival's selling some stock today, which also could have something to do with that as well. When we think about what happened yesterday, people were talking about this return to value stocks and this move away from growth stocks. And when we think growth, we think big tech, we think the NASDAQ. Explain what that means and why that's significant.
So the idea is that if you are in a low growth environment, which is in what we have really been in for much of the past decade, but especially through COVID-19, low growth meaning the economy is not growing quickly. Well, that means that you gravitate to companies. Investors gravitate to companies with very high growth prospects, no matter the environment that you are in. These are called growth stocks. So you think big tech. These are your classic front page growth stocks. Value stocks, if you think energy, if you think banks, they are more so depressed. They are trading at a level that is less expensive relative to their potential. But the idea is that these companies really need a big pickup in economic growth to really thrive. So the hope is that if we got a vaccine, we got great news yesterday from Pfizer, well, then maybe that will usher in a new era of stronger economic growth, and you can finally see these value stocks do well.
The biggest stories the moment they happen from around the globe. Subscribe to Bloomberg Quick Take now for insight in an instant.